Hello and welcome everyone to this morning's market report brought to you on behalf of CommuniutyFT for CommuniutyFT members, in which we'll discuss some major potential movements to occur over the next 24 hours. But before we do that, at this point, if we can all embrace a quick risk warning. So if we can familiarise ourselves with the information in front, engage as much as is possible, simply so that hereafter any decisions you make in your trading are of a fully informed nature. So, on the cards for us this morning, let's take a look then at some economies, the performance, value and strength of that economy as is reflected by the value of its currency. Let's also take a look then at natural gas to help us analyse and scrutinise an energy. Okay, let us switch to the platform. So in front of us we're looking at the daily chart of sterling versus US dollar, or more commonly referred to as cable. Now, when we look at this particular chart, the first thing we notice is this huge, almost humping picture, or this huge humping trend, okay, which would represent weakening of the US dollar followed by strengthening of the US dollar, simultaneous, of course, then with weakening of the sterling over the last given period of time. Now, we have some secondary trends, though, in that overall bearish move, and those are bullish trends, which is what we're looking at here. In terms of looking at this chart for opportunities, we can notice the following, or note the following. When it comes to the 100-day exponential moving average, this seems to be relatively accurate with regard to signaling support and resistance for the market, such that when the market breaches below the same, we can look for short positions. When it breaches above, we can look for long positions. But one of the problems here is knowing when to exit. In terms of helping us with exiting, what we can look for is a decrease in the bearish volume, which will help us then analyze where the market, where the order flow is going, which is fundamentally what drives the price. Similarly, we can take a look at natural gas, and we're looking at the 4-hour chart here of natural gas. And we want to take a look at a smaller time frame, because on the daily time frame, there's not a lot of action happening. So let's see if there's anything we can spot here. Okay, let's get some trend lines therein to help us with this analysis, and let's see if there's anything that comes to light almost. So technically, okay, what we're noticing here is that overall, there's actually a bottleneck formation, okay? And the bottleneck formation is as follows. Effectively, the high prices drop with the same gradient or similar gradient, and the low prices rise with a similar gradient. Now that's beautiful for technical analysts, and the reason the reason it's useful is because typically around the apex, opportunities are actually usually found. And those opportunities are as follows. We can say if it breaches the top diagonal, we can look for long opportunities. If it breaches the bottom diagonal, we can look for short opportunities. And that can be reinforced, or those levels can be reinforced with the stochastic oscillator, such that when the stochastic signals overbought and oversold levels, we can look to short that market, or buy it depending on where it signals. And it could be confirmation almost as to where the price is going and where we're speculating upon. So we hope this has been of help, folks. If you have any further questions, we will of course address them. Please do not hesitate to get in touch. We welcome all inquiries. We'll catch you tomorrow, and have a good day, and chat then.